respond to that, kindly take to the floor.
Thank you very much. Madam Bishop, I think, was more of a comment, and I agree with you that CMA, being the anchor around our markets, should be the one actually to do a lot of advertisements. Because our investment companies, and especially investment banks, if you look at those who work there, none could actually be able to marshal the kind of advertisement that is needed to cover the entire country. Because we have many investment banks for a small market. So only CMA, in my opinion, should adequately do that. Wilson, I precisely agree. Some of us were lucky by default. In my first year, I went to a farm that was called Kenya Karaoke. But I was going to say hi to my former MP from Kiharu as a student in campus, and I was going there so that he gives me something, pesa kidogo. He ended up giving me a job, and I ended up knowing all this. So you see now, this is by default. We should make it by mainstream. That our capital markets, when you are from Siaya, you are from Taita Taveta, you should grow up knowing investing in land is fine, but when you are making use for that land. But there are these more other alternatives. There is no country in the world, none, that grew without having a robust capital markets. Because that is the bridge of capital inflows. So that's one thing that we must do for ourselves to gain, but also do it for our economy to gain. Thank you very much. You are there, and we are all retailers. So we actually don't take part in decision making, because I always get that question. And I can see there are many Kenyans who invest in our local markets and even in that particular company. In my opinion, it's actually a good thing. Kenya generates on around, our usage is like 3,000 megawatts. I mean, we should be many times that, and I'm sure we should, and we will. Therefore, it means the field is so big, and efficiency is, how I see it, is like asking Telecom and Safaricom back then. Now that other entries are coming, shouldn't we transform this Telecom to be a kind of Safaricom? That's how I see it. Not in terms of constructive destruction of the company, but in terms of constructive evolution. That when there is competition, there is likely to be efficiencies to be gained. And I think it's good. Always know this. Warren Buffett says it. Utility companies, when you buy them, you must be prepared to buy at a premium. Because the customers for a utility are so sticky that you guys, the lines you have for Safaricom are the lines you bought when you are in campus. That's how sticky it is. Because nowadays calling is a utility. Now moving from a utility of water and electricity, where are you going to go? The change in infrastructure for our new entry, before our parties do where live, it's complex. And always remember, the infrastructure to carry that product also belongs to where you are as a shareholder. So even if you buy it here, I'm avoiding to be explicit, so that it remains here. So if you buy that product here as this customer, you still use the infrastructure to take it where you want, and you'll pay. I hope I've answered. Sorry, some things we talk in parables, because we don't want to be misquoted. Francis Minette, thank you very much. The biggest existential threat Kenya faces is debt. The sooner we accept that, the sooner we start being head-on dealing with that situation. It cannot continue like this without a proper reset that will give people haircuts and others will chop off heads. Forget about a haircut. Death has the ability to chop off a head, economically speaking. So the sooner we realize this, the more credible we become in looking for the solution. And the other issue of diversification, that was my topic. And I talked about it without using the name diversification. I belong to Berkshire School of Thought. That when you went over lunch, and if there is, in the buffet, there are 20 things to eat. There's nyama choma, tupukiza, fry, then chapati, ugali ya brown, na ugali ya white, na ugali ya mhogo, na ugali ya gwashi kama iko. And then, kwa pale kwa greens, kuna sukuma, kuna spinach, kuna dhoroko, kuna hii ingine. What do? You go to your favorite. You go and pick some ribs of nyama choma. You are done with meat. White meat, you take some chicken. And by default, you take the thigh. I don't know why we always do that when we start in the buffet. Then you go and take spinach and leave the others. You take your favorite. So, you only over-diversify when you are eating, when you don't know how the food tastes. So you go to a foreign country, there is nothing you know there. You go to Ethiopia. It is served. There is no kind of food you know. You only know colors. That one looks green and this one white. So what do? You take a piece of bit of everything so that if one disappoints, you don't come back to the session, to the afternoon session when you are hungry. So you are hedging against your ignorance. If you knew, you don't need to hedge. But because you don't know, you need to cover yourself. So what do? Let me taste a little bit of it. No, don't lie to us. It's because you don't even know how it tastes. Forget about tasting. You don't even know what it is. So when you fight, you are buying shares in your portfolio. There is one I saw. In your portfolio, you have 25 stocks. Are you an SE or are you an investor? Then we should make you the NSE. When you find you are buying 25 companies, in the banking sector you have all banks. In insurance you have Jubilee and Kenya Re, and then you have Sanlam. Hii ingine ya commercial, you have KQ, you have everything. Only one sector you have Car in general as one, because there's only one in that sector of automotives. You are just telling us, vinajaribu tu. So, when you know exactly what you are doing, you do not over-diversify. And because you called me here to talk about my case, my portfolio, I have no more than 5 stocks. And out of this conversation, I know you know which ones. Because why do you, if you parade 10 banks, this is the question Warren Buffett asks. If you have priority, let's say tourism destinations, you want to go for holiday. You create tourism destination number 1 up to 30. So you have graded your tourism destinations according to your preferences and according to fundamentals. So he asks, you've listed number 1 to 30. What are you doing with number 28? That's the question he asks. Your domain should be around the top 4. Because unless you had a problem in grading. But if you had involved all the tools and you graded, what are you doing with the number 11? So that is the issue of over-diversification, both in sectors and actually counters. In terms of investment, what I need to do, both is a no for now. Fixing money, of course, is a no. Anything fixed is a no in this time of how things are. So then, when you come to equities, I zero into sectors. Some sectors, we start with agricultural. Always know it is cyclical. Before you buy, just know it is all rain-fed. So if you make profits this year and next year, for sure, The third day I expect something different. Now I come to banking. I realize these guys are making money. But out of these guys, who is thinking ahead of others? Then I go to regions. I look at this profit they made. How much is from Kenya and how much is from the region? Then from there you can see the thinking of the management. Then I jump into where the thinking is corresponding with changing my life other than getting marginal increment in my investments. So I jump in there and I keep quiet and I wait. 2024, this is my last thing. This is company we are talking about that my brother is also a shareholder there. So because I do my own analysis, that's another thing I want to say. I actually don't believe in a small market of 60 companies, what is the expert's work? The expert's work should just be to facilitate the transaction. If you had the brain to look for 10 million, why do you need somebody to tell you how to do your 10 million? Then you had all the time to look for your 10 million. You work for it for 5 years. It will take you less than 2 days maximum of your spare time, not the full days of your spare time, to know everything you need about our stock market. And then, you are relying on what we did here. Which expert do you use? I'm not talking here about the experts here. I'm talking about investing in stocks. 60 companies listed in a stock market. You can do it with your eyes closed. Because once you have the initial information, the other ones becomes additional information. So I did some analysis that time. So I checked. Hey, then I see Kengen is here. It was then around 4 shillings. I look at the P ratio. I look at profitability. I look at dividend payout. Then I went into the energy. Now I bumped into that company. It was not exciting to me before. Then I looked at the assets. By that time, assets were 250 billion. Now the assets of that company is 401 billion. Market cap that time was 3.5 billion. A company covering the entire Kenya. Then in my mind, depending on how we think as Kenyans, nikaanza kuona hata wakiuza ile nyumba yao ya town na ile ingine ya pale Parklands is already more than the 3.5 billion, the valuation. It means all the wires around here and all of us as customers are not even counted in the value of the business. Okay, that time it was making a loss. Then I saw how possible is this kind of a company like it to make a loss. And what is it making? Why is it making a loss? Then I decided, in any case, the price then was 1.8 shillings. It was 1 shilling 80 cents. Then I decided, a lollipop is more expensive than this share. Tropical is more expensive than this share. So what am I losing? Just a sweet. So even if the worst case scenario, if it goes haywire, all of us will be in blackout. Will that be tenable? No. Then I decided I don't even want to consult anyone. Buy. I remember the first time I told the stockbroker, buy this. They told me, what are you saying? Yes, buy that one. You know, Mohesh, it's making, yes, I know. It's making a loss, nini. So I was asking them, do you want me to buy when it's making profits? Then I jumped in and I decided to actually concentrate, not diversify. We are talking about 2024, the price it was. I had bought over like 2 years prior or thereabout. But by 2024, today we are 2026. Today, it was 1550. Having touched 18 before Iran. So it means a million then, 1.8 million then, 1.8 million shillings then in 2024 is 15.5 million today. Asanteni sana.
Honorable, before you leave, we just have one last question from our Chief Commercial Officer.
Asked me to ask you for your bank account number. But that's not what I'm about to ask. Thanks for the very insightful comments. There's a question I've been carrying for quite some time. You recently made news to have invested significantly in Kenya Airways. When you look at the PE ratio of Kenya Airways, it is nil. They've not issued any dividends, and they are making losses. Do you know something that we need to learn?
As I answer that, because you guys are market people, there is nothing I have said here that you could not have found before. All the price to book values, all the P's, all that information was public before you came here. It is still public by the time you are leaving here. Now, there is a reason I'm saying that. There could be a misconception that as somebody is a leader somewhere, maybe you have some information. I have told you about Kenya Power. The initial, what are 2020? The initial ones, I actually bought when I was deep in the opposition in the last government. Deep. It was actually making losses. But the reasoning is usually this when I'm buying shares. Before I come to this KQ issue, me, I don't buy shares. I buy a company. Even if I'm buying one share, who anatijaza kama nanunua kampuni yote. The demeanor is like I'm buying the entire. So when you are buying 1,000 shares of ABSA, you must have a demeanor of buying the entire ABSA. When you are buying Sanlam, have the demeanor of Patrice Motsepe, is now the largest shareholder. Like you are buying the entire company. That's where you start grounding yourself on fundamentals. When you buy shares, you ground yourself on analysis of the stock movement. Imekuwa price gani for the last 2 years? So you start now tracking the market when you are buying shares. But when you have a demeanor of buying the company, you start tracking their performance for the last many years. That's what I did to Kenya Power, by the way. So there were some 3 years, 2 years, I think, or so, it made, I think 1 year or two, it made losses. Then I started going historically. I realized these 2 years were outliers. But I also realized one more thing. People have been dampened by this information. This should work for me. You know, the gap between what you know as the investor and what the market knows, let me repeat. You make money in the market through the difference between what you know and what the market knows. Always get the market as an individual person. The market will be superficial most of the time. The market will always be superficial. It will not go so deep. The market, not even the people, the market. They made a loss. From there, the market becomes rained on. So you have a hen, jogo. It has been rained on. When it's rained on, it looks like ata iko na homa, kuku. Isn't that the best time to give an offer? Then you take it away from the rain. You don't even take it away from the rain. You definitely know the rain usually stops. So you buy it when it was raining an hour ago. In the afternoon there is sunshine. Ile jogo inaradarada kwa boma, and you bought it for a song. So that the difference in information usually comes when you dig deeper. These issues I'm talking about, P, price to book, history, what are they expanding to, what, like the banking. The reasoning of the market, in fact, banking is the best example. The reasoning of our market is dividend. It ends there. So that's why the banks that are paying dividends are highly priced than the ones not paying. But you realize the ones that are not paying are even having annual incremental profits higher than the ones paying. So it means these banks are becoming bigger and the value is being created more. I was just trying to avoid the question of KQ. That's why I engaged in a lot of obesity. So my reasoning again, should I buy it when it's making profit? That's my reasoning. I don't want to go so deep, but every information about KQ is public. And even what made me buy is also public. In fact, I bought it 2 days after Business Daily put it public, whatever the reason it is.